Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about Xela technologies going with the ticker Xela. Now in today's video I'm going to be talking about due diligence, technical analysis, institutional buyers, short interest, and what I think about this one. So without further ado, let's jump right into this one. So Xela. Now first off, we can start off with the presentation because it does give you a good amount of information and a good idea of who they are if this is the first time ever you're hearing about Exela or Xela. And for this one here, you do see that some of their key highlights includes revenue of $300 million, which is a decline of 18% year over year. Now I will go through the results from the first quarter 2021 versus the estimates from the fourth quarter 2020 in terms of the forecasts and whether they're going to actually meet those forecasts or not, so later on in this video. But some other things we want to take a look at is them at a glance. So they have a proven track record with more than 30 years of experience in the business process automation, with more than 4,000 global customers across the 14 industry verticals and around more than 60 Fortune 100 partnered with Xela. With the global footprint being more than 50 countries, more than 140 delivery centers, more than 1,100 facilities and managed, and more than 2,000 IT professionals and more than 18,000 employees. So the current emerging solutions include liquidity solutions in procure to pay, order to cash, and expense management. Now, further on from there, you're able to see their revenue breadth, their diversity, low industry and customer concentration, and referenceable solutions. So in terms of regions, they're working mainly 81% in the Americas, around 17% in Europe, and others being 2%. In terms of the industries, you have around banking and financial services being around 27%, healthcare being around 21%, and commercials being around 20%, P&C and life insurance 10%, tech and manufacturing being around 6%, public sectors being around 10%, and legal around 5%. In terms of their customers, you have top 20 customers are around 33%, top 21 to 200 or top 21 to 100 customers is 27%, and from there on to 200 that's 13%, and all other customers are 27% in terms of the percentage or the amount of revenue they get. Now, in terms of expansions of enterprise relating to BPaaS and SaaS solutions to SMB markets, you get to see that beyond 2021 and 2021, global SMB subscriptions across WFA and BPM application suite has been enabled. And from there on, you're able to see some other complexities relating towards gross profits and margin trends. The current margin trends in terms of the adjusted EBITDA, you're looking around 12.9%. Now, sequential improvement in profitability and decline in capex led to higher cash conversions. In terms of the gross profit margin, it's driven by improved business mix and effective cost management. And in terms of the closing takeaways, they're the leader in business process management solutions globally, with rising performances including sequential growth in profits and operating metrics, with improving operating leverage. Deep valuable multi-industry, long-tenured relationships with a stable and diversified revenue base, substantial backlog, and a growing pipeline. They also recently launched SMB business, showing robust growth in the first quarter of 2021. With the growing market opportunities, Xela represents more than 1% or around 1% of growing TAM, and plans to strengthen the balance sheet plans in progress as previously announced, and well positioned as the economy recovers globally, customer sentiment turning positive after a challenging 2020. And from there on, we can start taking a look into the latest news. Today, on June 29th, they announced that Xela Technologies adds robotic process automation RPA platform for a large health insurance company. And for this one here, you're able to see a bit more. So just a quick thing, that Xela or Xela is a global business process automation leader. Today announced the rollout of EON Xela Robotic Process Automation PBA, or RPA, my bad, platform for large health insurance company. And they added that our EON platform currently deployed for several customers in banking and the finance and accounting and public sector will now be utilized by a large insurer. Our configuration or configurable RPA platform minimizes processing time and reduces human error and increases throughput, said Srini Murali, the president for Americas and APAC. Now, from there on, you get to see one of the last ones. They also had the court dismiss a class action lawsuit against them that was filed in March 2020. And other than that, back on June 08, Xela Technologies expands PCH global deployment for one of the largest specialty care services insurance companies in the US, with around corresponding from over 27,000 unique hospital systems and providers across the country. And another one before that, you're able to see on June 1st, Exela rolls out its secure digital signature platform DrySign across the Indian market. And DrySign lets the user sign online documents in facilities or facilitates remote document delivery, archival, and administration with no papers required. Another one as well before that was on June 1st, Xela Technologies expands PCH global deployment for a large third-party administrator, adding over 18,000 healthcare providers for digital submission of claims and correspondence. So no need to go further on that. And one before that was May 06, where Xela named a major contender in Everest Group financial crime and compliance operations, service peak mattress assessments in 2021. And before then, we can start taking a look into the fundamentals and a bit of the financials to get a bit of an idea on where this one is going. So for the first quarter of 2021, the highlight was around a revenue of $300 million. Meanwhile, in the fourth quarter, that was around $314 million. So we see a little bit of a decline from quarter four. And if we were to take a look into the 2021 guidelines, you're looking at a revenue range of around $1.25 billion to $1.39 billion. If we were to take that revenue from the first quarter and multiply it by 4, you're looking into around $1.2 billion that falls short from the 2021 guidance. Now, the next thing we're looking at is gross profit margin, which is around 22.5%. And the gross margin rate for this one is between 23 to 25%, so it does get close to it on the bottom side. Again, we're hitting the bottom side. And operating income was around $4.3 million compared with an operating loss of $2.2 million in the first quarter of 2021. And if we were to compare that from the top here, you're able to see the operating loss was $13.9 million. So definitely a really good jump in the first quarter compared to the fourth quarter, because he did have previous losses, especially in the fourth quarter of 2020. That's actually a lot better because you're seeing operating loss of $13.9 million from quarter 4 2020 to again an income of $4.3 million in the first quarter of 2021. However, when we're looking into net losses, you're seeing a net loss of $39.2 million compared with a loss of $12.7 million in the first quarter of 2020. Now, that $39.2 million net loss you're seeing in the fourth quarter, it was $88.9 million. And the year before, it was around $304.1 million. So there's definitely a lot of improvements in the business. Now, the question is whether those highlights or guidance itself for 2021 are matching. So the adjusted EBITDA margin rate was around 16 to 17%. Over here, you're seeing I'm not sure exactly what the percentage here is because they're not showing it, but I would say it does go on the lower side again. So they mentioned here that they are very pleased with strong expansions of both our margin or gross margins and adjusted EBITDA margin in the first quarter, which reflects our ongoing commitment to focus on our core business and drive continued operational improvements. We're also impressed with the adoption of the various digital assets group solution in the SMB and enterprise market. Based on our first quarter results and the momentum we see in the business, we reiterate our prior 2021 guidance, which is again this one here. So they're very optimistic that they will be able to reach on there. They're not far off, by the way. They just perhaps didn't meet that if you were to divide it by 4. But again, some businesses really show different numbers on quarter 4 than quarter 1, etc. So for the time being, I'll say they are on track to meet that guidance that they put themselves in 2021. Before there, on March 15th, 2021, Xela Technologies has announced $26.8 million private placement, very similar to an offering, and that one here was at a price of $2.75 per share. So, and there's an exercise price of $4 later on. And the current price point for this you're seeing at $2.34. So it's not far off from the $2.75, but it's definitely at a discount from that private placement that was put in March. Another one on March 9th, Xela Technologies wins $90 million contract for cloud hosted PCH Global, delivering healthcare solutions for major US insurance. And this one here, this effort will accelerate the digital transformation efforts for major US health insurance company, and as part of a broader relationships that include over $28 million in revenue in 2020. And they also are in compliance with the minimum bid over at NASDAQ. And another thing here you want to look at is institutional buyers. Unfortunately, the last bits of institutional buyers that were back in May, you see a lot of them were actually liquidating JP Morgan, BlackRock, you're looking into Goldman Sachs, etc., Royal Bank of Canada, Morgan Stanley, and you don't see any additions back in the month of June. So that might be a bit of a warning sign, a bit troublesome, but might be a little bit delayed, but we hope to be able to see more additions later on. And in terms of insiders, you get to see that insiders get shares awarded or exercised, and they're just selling. They're not really buying any shares in the last few months. And in terms of short interest, you're looking at this one being somewhere between 24 and 30% on short interest volume per day. And in terms of the price over sales, and I'm not sure how accurate this is, it's currently showing at 0.07. And if that is actually the case, this is incredibly discounted. But more likely than not, this is not adjusted to the private placement, raised shares, etc. So before moving on towards technical analysis, if you'd like to see more contents like this one here, make sure on the bottom right there's a subscribe button. Make sure to click that with the bell notification buttons on. It helps my channel a lot. And don't forget to drop a like to this video as well. If you'd like to join our Discord and ask me more questions, you can do so in the description below. Let's move on now towards technical analysis. Now, from a technical analysis standpoint, on a 1 month, 1 day perspective, you're starting to see that this one is hitting a really nice reversal on the MACD. Now, the moving average it's currently above that 50 SMA line at the 164, which is incredibly bullish. And when you're looking into the ADX, for instance, you're able to see that this one here is sitting at a good level, good point level, that is suggesting the start of a trend. William % R as well is showing that this one is a bit overbought, which might be a bit dangerous into here, but momentum is incredibly bullish, went from the negative of 0.22 to 0.72. So overall, it's really playing a bullish reversal, and it appears to be with good momentum. Now, the next thing we're looking at is stochastic fast and stochastic slow, and that's definitely looking really good, as it shows that there might be another leg up for this one. The moving averages for this one, or the Bollinger Bands, which is a momentum volume band, expects this one to trade 198 on the top and 107 on the bottom. But what I'm anticipating is something similar to this, where it does move forward and the Bollinger Bands expands with it. Just keep in mind that sometimes it does follow back within, especially with massive volume jumps like we've seen today. Today is the second biggest volumes ever recorded at around 352 million shares traded at almost 250. That's coming down very close to almost $1 billion being traded today into the stock. But definitely the volumes the unbalanced volume are incredibly positive, one of the highest positives I've seen values ever for this stock. Now, in terms of the Fibonacci retracements, and the reason why I'm showing you this one is because this one appears to be used a lot by high-frequency traders and institutional buyers. The resistance levels onto the Fibonacci retracements are 279, 375, 453, 530, 641, and 782. The current support here is 123. Now, on a price line action, you're able to see that we do have currently a very strong support sitting at the 236. Below there, 217. Below there, 190. Below there, 170, and then down towards 153 and then 123. The significant resistance level here are 251, and then from 251 you're able to see at 288, 288 to 325, and from there on to 359 and 412, going up to 458, 549, 608, and then 782. Comes to the question to Ed, what do you think about this one? Well, this company is definitely turning around. It's doing a lot of the right things, so it is definitely looking very interesting from where we're going to be going from where we're at right now. And if they do reach their guidance, which is a lot of changes that are happening from last year and the massive losses that have been encumbered or incurred, we're looking into a really nice reversal. And if that does occur, this one can easily increase on volatility and price and double easier. Now, what do you think about this ticker? Make sure to mention down in the comments below. Make sure to subscribe, leave notifications on, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.